So we need to be very careful where we are right now in the market. This line right here is the kind of the final line before a potential accelerated sell-off can start, kind of like what we saw these last 3 days in a row where we had major gap downs. And if we were to get below here meaningfully, this thing could probably drop quite a bit more, especially during this time frame. So we need to be very careful of that. Does that mean that it has to happen? By any means, no, it does not. However, I'm going to give you two potential paths we could see leading forward, and you may as well just use it as like an indicator to maybe help you with your own trading strategies to understand maybe what could happen in either direction. As always, use good risk reward for each side, and yeah, we'll get right into it. All right, so we have two potential paths for SPX, like I said. Basically, let me just preface this with, we are on the final kind of like key trend line support that goes all the way back here. You can see this blue line that I'm hovering over right now. This is kind of like the final support before we actually start to really sell off very hard, and you see a lot more of days like this, most likely, these 3 days in a row. This was a very, very extended and also aggressive sell-off that we had for 3 days, and now we're on the edge of where the market could really start to fall down. We probably could see around like 3,400, 3,450, that kind of range if we were to fall off this edge here. Now, the market also knows where these levels are, and it tends to bait a lot of bears, especially around levels like this, as we've seen in the past, and it's able to pop right back up and kind of rally off of that. So, for example, right here, this is the day, February 24th, that the Ukraine war was announced, and as you can see, we had a major gap down going into the day. A lot of retail went into short because of that news, and I actually talked about this in the Discord today. Look what happened afterwards. We had a massive rally like this, just obliterated all the shorts during this day, and we had 2 days just major green after that. So it's always you always have to be very careful, especially if you're only looking at news and events. It doesn't really matter. The news and events matters to a sense that the market can move afterwards, but it doesn't have to be the most obvious outcome afterwards. So it's all about price action, and I always preach that you need to look at risk reward, as always, including all of these variables such as like dark pools and order flow. I like to use them all in conjunction together to form my thesis, but then at the end of the day, it's all about your risk reward setups and price action. But otherwise, we have two setups here. The first one is that we could potentially test this upper orange line, and I've talked about this orange line a lot. If you go all the way back, this is the one that I've talked about in the previous videos that goes all the way down to 2009. So you can see here, this is a very key level from 2009 lows in the market, acted as a support for a bit and then a resistance all the way along. This one I really like, and it's a very key one. Also predicted the 2018 correction and the 2020 market crash, literally off of this line. That's when both of them occurred. So we actually used it as a support not too long ago. It was like 2 weeks ago, and we actually just recently fell straight through. So this brings the question, will this weekly candle for this week close meaningfully below this level? And if so, what will that mean for the following weeks afterwards? So we actually had the previous week close slightly below it. This week, if we closed below again, this would be confirmation that there is probably going to be continuous downside, and we're probably not going to get back up above this thing in the near term at all. So that would be very bearish going forward, and I'm very interested to see if we have 2 weekly closes below this level. Otherwise, in the next 2 days, Thursday and Friday, we have first the day after VIX OPEX, which tends to have a pretty wide range. We were talking about this earlier in the Discord as well. This day tends to have 100 plus points of a move on the SPX, just the day after the option expiration for the VIX. So that is something to look for, especially if we go to a certain extreme one way, it could pop back the other way shortly after. So that is something to take note of. And then also Friday is a massive OPEX, so you do want to look at that as well. 3.2 trillion is expiring on that day. So that's two very big days, and it's very possible we have a large range in either direction. So potential we have a retest of this level within the next week or so. This would be my first potential path that we could see. This retest of this level, like around 3,950, would not surprise me at all. It would fill one of the gaps that we already have, which wouldn't be surprised. And then we would retest this level, and then once we got there, we could see, is it going to have a hard reject off of this? Or is it actually going to be able to blow through and close above, especially during this weekly candle, which would be key. If the weekly candle of this week closed above this level, that'd be pretty bullish for the following week, and at least save the bulls for a few weeks afterwards, just because it would eradicate the fact that we actually closed the last week below this level. So that'd be the first path, and again, it's all dependent on price action. If we were to get up to this level, converges with both my channel I had before, this blue line right here, and as well as this orange line. So again, I would not be surprised to see this level get hit, this like 3,950 to 3,960 level get hit very soon, just because there's two key trend lines converging together, and also it would be a perfect retest of this level that we broke through below, plus would get us to gap fill one of these gaps. However, I must say this second gap up here is very interesting. This one is above both the orange line that I have and the blue line that I have right here. Would not be surprised to see this big gap fill happen over here, have a retest over here, but this would actually be bait for a lot of bulls to think we are going to gap fill over here for this 4,000 and roughly 17 gap that we have, which then in turn we could fall down off of that level after it baits a bunch of bulls back in. So that's just based off of experience. Does that have to happen? By any means, no. But in terms of experience, that's kind of my thought process, and you guys tend to enjoy, I guess, me sharing my thoughts. It seems so, especially in the group right now. So I'm just sharing that with you. Just keep that in the back of your mind. Always be prepared, because the market makers like to fake people out. If we were to close one of the gaps, people may think the next one's coming up next. But remember, there's a key line here that we are retesting, and it could reject very hard off that level. Now, the second path we could see is a potential gap down tomorrow on Thursday. Now, I want to go back and look at a previous FOMC, which is over here for May 4th. This day was very bullish in terms of the daily candle, and actually before we were in kind of like a downward trend, we popped up a bit for the days previous and then had a massive green candle which baited a ton of bulls in. They thought that we were going back up to at least 4,450, which would be the top of this channel that I had before. After a daily candle like this, not a surprise that a lot of them were getting into it. And then we gapped down the next day, which is the key thing here. After this gap down, we actually blew past the low of the previous day and closed below that. That is a very, very bearish candle, and it's not something you want to continue to be holding long from. You shouldn't have continued to hold long during the day at all because of how far it fell down. Always have stops in place. Again, this typically would be a bullish candle, so no, not like throwing shade against anybody that was holding long after this. By any means, you just have to have good risk reward, and then to get out of that and then potentially play the downside afterwards. But this is a big fake out after FOMC, and we need to be very careful and look for something like that after today. Now, we didn't close super bullish by any means. It's kind of indecision in terms of the candle. Now, it's not a complete doji where we closed right as we opened. There is some green in this, but as of now, it's starting to curl. So a lot of bulls can maybe start to get antsy, especially with the fact that we are on a key support right now. They can start to get antsy, maybe try to get into that. There's a juicy gap fill that they might want up here as well that they may be eyeing. So again, they need to be careful of that. And there's probably a lot more emphasis in potentially getting into a position right now. So watch out for tomorrow. If we have a big gap down after the FOMC meeting, that could be a potential, especially if it's under this level. I'll go to the 15-minute chart, give a little bit more of a clear picture. This level right here that I have, the blue line that I was showing you earlier on the daily, if we gap down below here, be very, very careful. And that is a little bit of a bearish emphasis for that day. Today we actually gapped up and opened right above it. So that gave us a bit of a bullish emphasis. You can see right here it bounced, and right over here it bounced. Here it closed a little bit before after that FOMC meeting was released, and then went straight above. Had a great test of this 3,725 level that I had previously. Was able to close above, but watch out for a gap down, whether it be tomorrow if it happened below this level, or even Friday. That would give us a bearish emphasis. And right now it's sitting at about 3,750. But I'll continue to post the charts on Twitter and in the Discord as we see appropriate. But those are two scenarios that I see, and if we have this gap down below here, I'd be very, very careful going forward because of where we are on the chart. Like I said, if we start to fall below this level right here, we could start to see some very excessive and aggressive selling following that. So be very careful. We could again have a pop above here, have that retest, and maybe sell off the retest. But as always, you need to be careful when we're very close to the lows. Have good risk reward. It doesn't mean you don't have to be able to go long around these levels. A lot of these very bear baiting levels like this one that we had right now tend to be the precursor to a very large rally afterwards, kind of like after they bait a bunch of the bears in. So it could be a viable long strategy. Just make sure you get out very quickly if you need to, and if your stops get activated and stuff. So do be careful about that. We have seen also a lot of dark pool prints happening. We saw last Friday this 5.9 billion of the signature prints. On Monday we saw 7 billion right here for this 389 level, and I do have them marked on my SPY chart if you wanted to see some of them here. And these are very, very big. This is uncommon that we see ones above 4 billion, especially in premium for signature prints, and we saw 2 of them previously over here. And then also we actually had a singular print down here so far before FOMC for 1.4 billion. And as of now, they are, if it was a buy, it would be up. And as of now, it does seem like it is a buy around this level, but I'd like to see weekly confirmation above it to kind of get a sense if that is true. And then lastly, as of now, we actually saw a lot of put flow come in today, even after FOMC. We were seeing during that rally, after FOMC happened, during that rally, we saw a lot of this put flow come in. We saw 4.7 million for the 362. We saw 6.5 million for the 364 strike as well. These are both 715. And these are pretty aggressive prints that we're seeing coming in and hitting the tape. And then we saw the other one over here for 362 strike. So these are continuing to hit the tape even after hours. Like this one was at 4:05 Eastern. So do be careful, especially if we do get that gap down tomorrow. That is going to provide a little bit more emphasis on the bear side, along with this matched flow. So just wanted to give you guys an update on what I might see for right now. But otherwise, as of now, be careful with the next 2 days. It could be very volatile after VEX OPEX, which was today, and then also OPEX on Friday. But other than that, I appreciate you guys watching this video, and I'll see you guys next time.